welcome back. Well, the Nifty is holding steady at around that 17,350 mark, but we are in the thick of earnings season. A lot of companies which are reacting to earnings, and one such counter is IndiaMart. The earnings were a tad bit mixed because there was a nosedive when it comes to the margin performance of the company, though some of the internals did look steady. We are now joined by the management of the company. Dinesh Agarwal, founder and CEO of IndiaMart, joins us on the show. Mr. Agarwal, good afternoon. Thank you so much for making time. First up, let me talk to you about this buyback announcement that you have done. Will the promoters be participating in this buyback? And if yes, to what level?
Yes, it is. Earlier we used to declare dividend, and now I think we have been advised that this is a better cash efficient manner of distributing wealth to the shareholders, and that is how this buyback is announced, and promoters will participate to the extent applicable.
Holding is around 49.5%. Do you have a roadmap in place where you're looking at decreasing it, and if yes, to what level?
No, we are neither looking at decreasing it or not looking at increasing.
Fair enough. Mr. Agarwal, also wanted to get your sense regarding the EBITDA margins, because those have nosedived this quarter, 28% versus over 40% last quarter. What transpired? Was there a one-off? And more importantly, will it revert to the 40% plus levels going forward?
So, as I've been guiding earlier also, we get our leading indicator is the collections from the customers and number of customers. Now, collections from the customers last year were negative because of the COVID, and which is now reflecting in the revenue, because collections from the customer flow into the deferred revenue, and from deferred revenue it comes into the revenue. Now, this year collections from customer have grown up by 31%, which should reflect into the revenue from operations in coming quarters, and that should take care of margin to some extent. On the other hand, we are heavily investing behind the growth, as well as the salaries have been re-rated in the market, and which is putting pressure on the EBITDA margin. So growth and cost is definitely a area which is going to put pressure on the EBITDA margin for some time before it bounces back to, as I have guided earlier, around 35% or so in the long run.
A lot of people are highlighting that there is a lot of rising competition in the sector. You, of course, have the early mover advantage, but can you just tell us what sort of an impact is it having on incremental gains?
No, I have not seen any impact on IndiaMart in terms of the competitive pressure. Yes, there is a lot of investment being made in the B2B sector as well as in the SME sector, but those are all in very, very different areas, which is not adjacent to IndiaMart. IndiaMart continues to maintain its lead and continues to thrive well. We have not seen any customers complaining or moving to a competition from IndiaMart.
As you mentioned in the first answer that, of course, the demand outlook is strong. Even if competition comes in, you're able to invest and, get it earlier. What do you make of the cost escalation that is happening? You mentioned briefly about the margins, but can you just tell us how well the company is prepared, say if cost according to employees, investment needs, upgradation, all these tend to go up because of rising competition?
Yeah, so we already have a healthy cash balance of about 2,000 crores. And given that we are now investing behind the growth, we have added about 500 people in the last quarter itself, and we will continue to add headcount in the sales and servicing both, as well as in the product and technology. We believe that we have seen in the past multiple cycles that IndiaMart business becomes profitable in a couple of years. So we believe that we will continue to operate in 25 to 30% of margin for now. But given that our cash flow from operations are healthy, we will trend to the cash flow from operations level of margin in times to come.
You're also investing a lot in SaaS to tap into the emerging opportunities. Can you talk to us a bit more about it? What kind of potential are you envisaging?
Sorry, I did not understand.
Okay, because we understand that you've committed around 990 billion towards, minority investments in a lot of acquisitions, and you're also, increasing your presence when it comes sales, SaaS medium. Is that something that you're looking at deepening your presence in?
Yeah, so out of the 1,000 odd crore that we have invested about 668 crores in the accounting space alone. Where we have acquired Busy Infotech, we are in the process of acquiring Live Keeping, we have invested in Vyapar as well as we have invested in Real Books. Now that particular sector seems to be completely done, and we would be focusing on consolidating that sector over the period of time, as well as launching more products and more sales initiatives on that side. Other than that, we have made investments in IP Monotaro. Monotaro is a Japanese B2B MRO company where we have picked up 26% stake. They are doing about 50 crores of GMV at very cash efficient manner, about 5 crores of investment per quarter. Another one that we are doing is software as a service, which is mostly to the logistics provider. So logistics, whether it is Fleetex, whether it is Shipway, whether it is Super Procure, these are the softwares which are being used by different logistics participants or D2C participants to enable their business. This is in line with our strategy, and we'll continue to look at those opportunities even more.
Right. So just one statement regarding, fundraising. Last time when you did fundraising, it was around 8,000 rupees stock price. Now it's 4,500. And it's not only the case with you. Nasdaq has gone down. Various other e-commerce companies have gone down. Do you see funding drying up for high growth areas like your company and various other in the new sector? Or you think that it has become more selective now and that's why this sort of derating?
So it is difficult to comment on the market like this, because in the 2021, when the corona was on its peak, the technology stocks were booming. Now they have probably become more realistic, and it is hardly very difficult to predict funding and as well as the market sentiment. We can continue to focus on our revenues and cash flow from operations.
Got it, sir. Thank you so much, sir, for taking out time for us. Good to chat with you. Hope you get some time once again when you have some news to share with our viewers. Maruti will be declaring its numbers, the big order major. Let's go across to